Before we start, here's the pattern you need to understand because it repeats 20 times in this video. Recession-proof businesses are almost never exciting. They're not glamorous, nobody brags about owning one at a dinner party, and venture capitalists don't fight over them. But they all share one thing in common. People need them, whether the economy is booming or the economy is on fire. That single trait is worth more than any amount of hype, any pitch deck, or any trending headline. It's the difference between a business that merely does well and a business that survives no matter what gets thrown at it. Let's count them down, starting at number 20.
Number 20, grocery stores. People stop buying new cars in a recession. They stop booking vacations. They stop eating out 3 nights a week. But they never, ever stop buying food. In every downturn since 1970, grocery store sales barely moved, while almost every other retail category fell off a cliff around them. During 2008, department stores and specialty retailers lost a huge chunk of their sales as shoppers simply stopped spending. Grocery stores barely noticed. In fact, something interesting happened. As families cut back on restaurants and takeout, more of that spending got redirected straight into grocery carts. Go back to the 1970s oil crisis, and you'll find the same story. Gas lines wrapped around the block, but the grocery store 2 streets over never had an empty shelf. People still had to eat 3 times a day, recession or not, and that one unshakable fact is why grocery stores sit at number 20 on this list, the floor beneath every economic storm, and one of the easiest businesses in the world to understand.
Number 19, auto repair shops. Here's something most people get backwards. When the economy crashes, people don't stop driving to work. They stop buying new cars. Instead of trading in the old one, they keep it running for another 2 or 3 years. That single decision, repeated by millions of households at once, sends a wave of business straight into auto repair shops. In 2008, new car sales collapsed by nearly 40% as dealerships emptied out. But repair shops stayed busy the entire time, patching up transmissions, replacing brakes, and keeping aging vehicles roadworthy for families who simply couldn't afford a new payment. The car got older, but the need to drive it never went away. And that's exactly why auto repair shops have historically seen demand rise, not fall during a downturn. Even the 1980s, when interest rates on car loans climbed into double digits, followed the same script. Financing a new vehicle became painful, so keeping the old one alive suddenly made a lot more financial sense.
Number 18, funeral homes. This one sounds harsh, but the math behind it is brutally simple. People pass away in good economies and bad economies at almost exactly the same rate. The stock market has never once postponed a funeral. Funeral homes carry one of the flattest, most stable demand curves of any industry in modern history. When the 2008 crash wiped out trillions in wealth, funeral homes didn't see a single meaningful dip in business. It's an uncomfortable truth, but it's also one of the clearest examples of what recession-proof actually means. A service tied to something that happens regardless of GDP, interest rates, or unemployment numbers. Families may choose a simpler service to manage costs, but they don't skip it altogether, which is why this industry has quietly compounded through every single decade on this list.
Number 17, debt collection agencies. When times are good, people borrow more. Credit cards, car loans, personal loans. When times turn bad, more of those same people fall behind on payments. That shift creates a strange kind of opportunity for one particular industry. Debt collection agencies actually see business increase during a recession because a bigger pool of loans goes unpaid all at once. During both 2008 and 2020, collection agencies reported some of their busiest stretches in years, right as everyone else was struggling. It's not a comfortable business to think about, but it's one of the most quietly recession-resistant industries that exists, because economic pain for households often translates directly into more work for collectors. In a strange way, this industry moves in the opposite direction of almost everything else on this list. It actually accelerates the worse the headlines get. Number 16, discount and dollar stores. During every major recession since the 1970s, dollar stores did something almost no other retailer could. They kept opening new locations while everyone else was closing theirs. In both 2008 and 2020, major dollar store chains posted some of their strongest growth numbers in company history, expanding into strip malls that competitors were abandoning. The logic is simple once you see it. When people have less money, they don't stop shopping altogether. They trade down. A family that used to shop at a mid-range retailer starts buying the same household basics for a fraction of the price. That single behavior shift, multiplied across millions of households, is enough to turn a recession into a growth opportunity for the entire dollar store industry. One of the only sectors on this list that has historically expanded its footprint precisely when everyone else was shrinking theirs.
Number 15. Pawn shops. Pawn shops are unusual because they profit from a downturn twice, in two completely opposite directions at once. First, more people need fast cash to cover rent or bills, so more jewelry, tools, and electronics get pawned across the counter. Second, more bargain hunters walk through the door looking for cheap second-hand goods instead of paying retail price. During 2008, pawn shop chains reported rising loan volumes and rising foot traffic at the very same time, a business model that essentially wins no matter which side of the transaction people are standing on. It's one of the few industries built to profit from both desperation and thrift simultaneously, a business model that essentially hedges itself against whichever way the economy happens to break. Whether people are selling out of necessity or buying out of thrift, the same counter keeps ringing.
Number 14. Laundromats. Clothes still get dirty in a recession. That basic fact never changes, no matter what the stock market is doing. Laundromats have survived every downturn since 1970 for a few simple reasons. The service is cheap, it's essential, and it runs almost entirely on small, steady cash transactions, rather than big-ticket purchases people can postpone. There's no financing involved, no credit check, no monthly bill to cancel. You need clean clothes, you have a few dollars in quarters, and the machine runs regardless of what's happening on Wall Street. That simplicity is exactly what makes laundromats one of the steadiest small business income streams in the country, and it's part of why they've remained a popular first business for owners who want predictable income without depending on any single customer or contract.
Number 13. Healthcare and urgent care clinics. People will delay an elective surgery during a recession. They will not delay treating a broken bone, a bad infection, or a child running a high fever. That distinction is everything. Basic healthcare demand barely dips during economic downturns, even as elective procedures and cosmetic treatments drop sharply. Urgent care clinics in particular tend to hold steady or even grow because they handle the immediate, non-negotiable medical needs that families can't put off at a lower cost than a hospital emergency room. It's one of the reasons healthcare, in its most essential form, is consistently ranked among the safest industries to be in during any economic cycle, even as the more optional, elective side of medicine rises and falls with consumer confidence. A hospital bill for a genuine emergency simply doesn't wait for the next paycheck. Number 12. Utility companies. Electricity, water, gas. These are three things nobody cancels, no matter how bad the economy gets, because the alternative is unthinkable. Utility companies carry some of the most predictable, contractually locked-in revenue of any industry on Earth. During the 2008 financial crisis, while entire investment banks were collapsing and household names disappeared overnight, utility companies barely registered the shock. Regulated pricing, guaranteed demand, and the simple fact that modern life is impossible without power and water combine to make this one of the most boring and one of the most bulletproof sectors an investor or business owner can be in. It's the kind of business that will never headline a magazine cover, but it will keep paying out through every single cycle without fail, quietly outperforming flashier industries decade after decade. Number 11. Accounting and tax preparation. Taxes still have to be filed every single year, recession or not. That deadline doesn't move for a stock market crash. But here's the twist. During a downturn, demand for accountants often goes up, not down. More people need help navigating job losses, filing for unemployment benefits correctly, or reporting business losses on their returns. More small businesses need guidance on cutting costs and staying compliant while their revenue is shrinking. tax preparation firms that stayed lean through 2008 actually picked up new clients who could no longer afford a full-time bookkeeper, but still needed their taxes done right, proving that this industry barely notices which direction the economy is moving. Numbers still have to be filed, forms still have to be signed, and the deadline never once moves for a crisis.
Number 10. Locksmiths. It's a small, easy-to-overlook trade, but locksmiths have one of the steadiest demand patterns of any business in the country. People lock themselves out of their homes and cars in good times and in bad times, in equal measure. A distracted parent, a lost key, a broken lock, none of that has anything to do with interest rates. Because the service is emergency-driven and low-cost relative to the problem it solves, customers pay without hesitation regardless of what's happening in their household budget. It's one of the very few trades where a full-blown recession has almost zero measurable effect on how often the phone rings, which is exactly why it stayed a reliable side business and full-time trade alike across every decade on this list. Number 9. Vending machines. Low overhead, no staff to pay, constant small-dollar transactions happening around the clock. Vending machine businesses barely felt the impact of the 2008 crash because people were still willing to spend $1.50 on a snack or a drink, even while they'd completely stopped buying big-ticket items like furniture or electronics. That gap between I can't afford a new car and I can still afford a candy bar is exactly where vending machines live. It requires almost no ongoing labor. Restocking is simple, and the machine keeps generating small, steady income, whether the surrounding economy is booming or barely limping along. It's one of the few businesses on this list that someone could realistically start part-time, without quitting a day job, and still see it hold up through a downturn. A low-risk way to build a second income stream that isn't tied to any single employer. Number 8. Liquor stores. This one surprises most people, but alcohol sales are famously stable during recessions, and in some downturns, they actually climb. In both 2008 and 2020, liquor store sales held steady or increased, even as restaurants and bars were struggling to keep their doors open. Part of it is a well-documented pattern of stress spending during uncertain times. Part of it is simpler than that. As people stopped going out to bars and instead stayed home, a portion of that spending simply shifted from a $12 cocktail at a restaurant to a bottle bought at the store. Either way, the liquor store at the end of the block rarely feels a recession the way its neighbors do, and in some downturns, it ends up being one of the few storefronts on the street with its lights still on. Number 7. Childcare and daycare. You'd assume childcare spending would collapse when money gets tight, but the opposite often happens. When household budgets are squeezed, more parents go back to work or pick up a second job to cover the gap. And that means childcare demand often increases during a downturn instead of shrinking. Daycare centers have shown remarkably stable and, in some cases, growing enrollment through every recession since the 1970s because working parents simply cannot function without somewhere safe to leave their kids. It's a service tied directly to the act of earning income, which makes it far more resilient than most people assume. The more households need 2 paychecks to stay afloat, the more they need somewhere safe to leave their kids while they earn it. Number 6. Pest control. Termites, roaches, and rodents don't check the unemployment rate before they move in. Pest control is considered one of the most recession-proof service businesses that exists because ignoring an infestation almost always ends up costing homeowners far more money later. Structural damage, health risks, and lost property value. So even when families are cutting back on almost everything else, pest control bills tend to keep getting paid because the alternative is significantly worse. It's a rare example of a service where the cost of skipping it is higher than the cost of keeping it, no matter what the broader economy is doing. Fear of a bigger repair bill later almost always wins out over saving a small amount today. Number 5. Plumbing services. A burst pipe does not wait politely for the economy to recover. Plumbing is fundamentally an emergency service, and emergency services get paid in every single economic condition because the alternative is a flooded basement or a house with no working water. This is one of the core reasons skilled trades in general, plumbing, electrical, HVAC, have stayed remarkably stable through every U.S. recession on record. People will cancel a vacation before they'll leave a broken pipe unfixed, And that simple hierarchy of needs is exactly what keeps tradespeople working steadily, recession after recession, decade after decade. There's no version of a downturn severe enough to make a family decide to just live with a flooded floor.
Number 4, insurance agencies. Car insurance, home insurance, health insurance. In most cases, dropping coverage entirely is either illegal or dangerously risky, so almost nobody cancels their policy just because the economy is struggling. Insurance premiums keep flowing in steadily, whether the stock market is up 20% or down 20%, because the underlying obligation to stay covered doesn't disappear during a downturn. That's exactly why insurance is consistently ranked as one of the most defensive industries to invest in or to own. And it's why insurance agencies rarely see the kind of dramatic revenue swings that hit almost every other type of business during a recession. Premiums might get shopped around for a cheaper rate, but the coverage itself almost never gets dropped entirely. Number 3, thrift and consignment stores. As shoppers trade down from full-price retail, thrift and consignment stores see a direct and immediate boost in foot traffic. Sales at secondhand retailers rose sharply during both 2008 and 2020, as more people looked for ways to stretch a shrinking budget on clothing, furniture, and household goods without giving up the things they needed. What's striking is how quickly this shift happens. As soon as a recession hits headlines, thrift store traffic tends to climb within weeks, driven by shoppers who wouldn't have considered secondhand goods a year earlier, but suddenly see them as a smart, practical choice. Once that habit forms, a surprising number of shoppers stick with it long after the economy recovers, which is part of why the secondhand market has kept growing well beyond the recessions that first pushed people toward it.
Number 2, value fast food chains. Fine dining tends to collapse during a recession, as families cut the $150 dinner out entirely. But value fast food chains with a cheap, reliable menu often grow during the exact same period because families trade down from expensive restaurants to a $5 meal instead of cooking every single night or going without. This exact pattern has repeated itself in every downturn since the 1970s. As household budgets tighten, spending doesn't disappear. It migrates toward the cheapest reliable option on the menu, and value fast food chains are almost always waiting right there to catch it. Some of the biggest names in the industry today trace their fastest growth periods directly back to a recession year.
Number 1, repair and maintenance trades. And here's number 1, the one almost nobody thinks about until their air conditioner dies in the middle of July. When people can't afford to replace something, they fix it instead. And that single decision is the backbone of an entire economy of trades. HVAC repair, electrical work, appliance repair. These trades have shown the most consistent demand of any service industry across every recession since 1970. Because a broken air conditioner in the middle of summer or a dead refrigerator full of groceries doesn't care what the stock market did yesterday. It has to get fixed today, regardless of anyone's bank balance. This is the quiet, unglamorous, essential work that never fully stops, no matter how bad the headlines get. There's no app that replaces a licensed electrician, no subscription that fixes a leaking refrigerator, and no downturn severe enough to make people stop needing working homes. And that is exactly why it earns the number 1 spot on this list.
Notice the pattern across all 20? None of these businesses are exciting. None of them will make you famous, and none of them will get written up in a glossy startup magazine. But every single one of them kept making money through the 1970s oil crisis, the 1980s recession, the 2008 financial crash, and the 2020 global shutdown, 4 of the worst economic periods in modern history. If you had to bet your future on a business, betting on boring and essential beats betting on exciting almost every single time. The businesses on this list won't get you invited onto a stage or featured in a glossy magazine spread, but they'll still be standing the next time the economy takes a hit. And that kind of quiet reliability is worth more than most people ever give it credit for. If this video helped you think differently about what it actually means to build something recession-proof, subscribe, because next week I'm breaking down the exact numbers on how much it costs to start 3 of these businesses from scratch and how fast you could realistically get one profitable.